Hey traders, welcome back to the channel. In this video, we're going to talk about the Ashford Hospitality Trust, ticker symbol AHT. Now, it's been a while since my last video on this stock, and a lot has happened, especially when it comes to dealing with the reverse split that was completed on Monday. However, today, AHT had a great day, and it's signaling that the bullish momentum may be returning to the stock. So in this video, I want to re-go over, the reverse split and what that means for AHT, and specifically how it affects the price targets that we set forth about a month ago. After that, I'm going to go over some news that explains why our bullish thesis is still intact. And finally, as always, I'm going to break down the charts, going over key levels, key indicators, and more, so we know how to best play the stock moving forward. So without any further ado, leave a thumbs up on the video, subscribe to the channel if you haven't already, and let's get started. All right, so in order to understand the implications of the reverse stock split on AHT, we just need to re-go over what a reverse stock split is and what it does for a company in general. So a reverse stock split consolidates the number of existing shares of a stock held by shareholders into fewer, proportionally more valuable shares. A reverse stock split does not directly impact a company's value. That's important to point out. It does, however, often signal a company is in distress since it raises the value of otherwise low-priced shares. So that is also true. It essentially means that AHT has certain thresholds that they need to uphold in order to satisfy criteria. And right now, that they don't believe that it's feasibly possible to happen naturally. So they're doing this reverse stock split. They did the 1-to-10 reverse stock split in order to kind of artificially bring their share price up. So previously, for every 10 shares you held at $2, it now became one share at $20. Ultimately, however, you still hold the same position in the company. Your shares have not become any less valuable. Okay, it was all proportional. That is oftentimes confusing part if you are new to reverse stock splits. However, that is the case. Okay, you haven't lost any value in your positions through the stock split itself. And there are also positive reasons that AHT actually outlined for why this reverse split could be good for the stock and the company overall. Okay. The reverse split will meaningfully increase AHT's market price share above the $5 per share threshold required by many institutions to hold shares. And also, some brokers limit the ability or increase the cost to margin a stock under $5 per share. So essentially, those are two pretty good reasons to have a reverse stock split, where they're saying that by doing this and by artificially raising the price, there's now going to be the ability for more investors to get involved with the stock. However, at the same time, you have to take this with a grain of salt. For the most part, the reasons that companies do reverse stock splits is indeed negative. They do need to raise their price artificially. And also, when the prices get raised that high artificially, normally, the stock becomes less attractive to a majority of investors. It's a lot easier to get behind a stock sitting at $3 or $2 that you think is going to recover and has a lot of room to run to the upside, versus going all in on a stock that's sitting at $30 or $40. That's just naturally and psychologically a lot less attractive to invest in. So that is something to keep in mind here. However, could be some positives when it comes to this reverse stock split. But now let's get into the price targets. And right now, nothing has really changed with the price targets that I laid out about a month ago, because proportionally speaking, with the reverse stock split, the shares did not decrease in value. So as a result, I've updated this price target analysis that we went over about a month ago. And everything, I haven't changed anything from the original one. I just updated any new adjustments because of this reverse stock split in blue. So let's just re-go over that. And it's going to essentially show you that right now, AHT does have a lot of room to run to the upside if it wants to trade at fair fundamental value. So prior to, any filings and dilutions, about a month ago when I last went over this, we were sitting at a float of 190 million shares, which is 19 million shares after a 1-to-10 reverse stock split. There was also two filings that hadn't been diluted into the equation yet. There was the Keystone filing that came out in May, where an additional 30 million or 3 million shares after the reverse stock split could be diluted, and also the 7 knots filing that allowed for 40 million or 4 million currently shares to be diluted. And those dilutions both have already happened. They've both already been priced in. And we can see that because assuming both dilutions happened, we calculated that the total float will sit around 260 million, which translates to 26 million after the reverse stock split is factored in. And both of these have indeed occurred, and the current float does currently sit at 26.5 million. So we don't really have to worry about any major upcoming dilution. That's a good sign. Now, compared to the 2019 pre-COVID levels, we had an original float of 260 mil divided by 32 million, which was around 8. However, now we have 26 million shares, which is actually about 0.8 of the 32 million that we saw when we were in the pre-COVID 2019 era. So this creates a float that is around 8 times higher, or right now 25% lower than it was prior to 19, when it reached a pre-COVID high of $35 a share. So back then, when before the reverse stock split, we divided 35 by 8 to reach $4.37 as our dilution adjusted high. Now we got to divide it by 0.8, and we realized 43.75 would be the dilution adjusted high for AHT. And in addition, we can assume a 5 to 10% increase based on our bullish thesis that, we are currently sitting in a travel demand boom. And that brought our new realistic price target to 4.6 to 4.81 before the reverse stock split, or $46 to $48 after the stock split. And I fully believe that despite concerns over the Delta variant, our bullish thesis is still intact. I think the market has overreacted a little bit to the Delta variant. More and more people are getting vaccinated and protected against this Delta variant. And right now we are seeing reports that are still saying that travel demand continues to remain at an all-time high. I found a very interesting article where the CEO of United Airlines talked about the travel demand boom that they're facing. And there are a couple of really important notes that go to help out AHT's bullish thesis. Okay. We do see that they are currently expecting to generate positive adjusted pre-tax income for the third and fourth quarters. And also, we're seeing that domestic leisure has led to the recovery. And furthermore, CEO Scott Kirby told CNBC's Squawk Box on Wednesday morning that he hasn't seen a decline in bookings because of the fast-spreading Delta COVID-19 variant. So while the market has reacted negatively to news about the Delta variant, what we're seeing is that in actuality, the economy has not reacted as poorly. We are continuing to reopen, and people are continuing to get back out into society and to travel. And obviously, that's going to lead to some record-breaking numbers for AHT because they're going to see a lot more bookings in their properties. So with all that being said, we're seeing that ultimately, the reverse stock split did not change the value of the shares. Meanwhile, the price of the stock has fallen quite a bit since the reverse stock split was announced. Ultimately, meaning that right now, if you're buying AHT, you're buying at a discount. And second of all, we're also seeing that our price targets, nothing has changed. Okay, we set out that realistic price target a month ago, and pretty much everything has come to fruition. And what we're seeing as a result of that is that fair value for this stock still lies a lot higher than where it currently is, with potential highs of anywhere between $46 to $48. Anything above $48, that's when we start to get into a territory where we're overextended and we're trading above the fundamental value. However, right now we are sitting under the fundamental value. This stock is underpriced, and I think that's why a lot of buyers started to buy back in. They understand that the selling off can't happen forever. And, it was a relatively low volume day for the stock. Yet what we saw is just buyers on top of buyers on top of buyers getting into the stock. And that's what led it to kind of having this nice gap up in the morning and then holding its gains throughout the day. We have about an hour and a half to go before market close, currently sitting at 19.10. So once again, keep in mind, that's only $1.91 before the reverse stock split happens. Meanwhile, just, a few weeks ago, the stock was trading in the $3 and the $4 and the $5, and nothing inherently has changed about the stock or the company aside from the reverse stock split. And also, I guess you can factor in a little bit of a dilution, but that shouldn't have that drastic of an effect on the stock price. So that all is very, very good. Now we're going to take a look at the indicators. So we still do have a while to go before market closes, but we are sitting right around VWAP. I'm not really expecting something drastic to happen in the last hour and a half of the trading day. So as a result, I would just expect, us to kind of close around the VWAP, meaning that it's neither really bullish nor bearish heading into tomorrow. We could see a little bit of a dip just based off the fact that we are up heavy today. But also, I think, buyers can realize that even at these levels, AHT is very undervalued and still has a lot more room to go. So, tomorrow could really go either way. But now going a little bit more longer term in the fundamental analysis, we are seeing that we are well below our moving averages. Okay. We have fallen below all my favorite moving averages. We have the 21 day here at 28.81, the 200 day at 30.21, and the 50 day at 39.24. And just a few weeks ago, we were above all these moving averages. And like I said, aside from the stock split itself, nothing has really changed about this company. So there's really no explanation for why we should be sitting in bear territory, especially given the fact that our bullish thesis remains intact. And as a result, if momentum does return to the stock and volume does return to the stock, I definitely think that these tests of these moving averages is definitely possible. Like we could see a retest of this 200 at $30 very soon if the bullish momentum continues. So that's definitely a positive. However, right now, indeed, by being this far under all the moving averages, ultimately that gives off a bearish signal. So that's something to keep in mind. However, also one positive note on the indicators is the RSI. Okay, as you guys can see here, we got way into the overextended territory when it comes to the RSI. We're sitting still at very oversold levels, even despite the 16% move today. And so that means that once the bullish momentum does return to the stock, that we're going to have a lot of room to run to the upside. Okay. Take a look back in April when the stock was sitting at these low levels, similar to where we are right now. We saw a massive move from about, $2 back then all the way to about $7 in the course of a couple of months. And what we're seeing right now is the same thing can happen as long as, our bullish thesis remains intact and the volume continues to be there. So all in all, the moving averages give out a bearish signal. However, there are some positives to take away from our indicators. But now let's hop into just our key levels that we need to be watching out for in the next couple trading days. So starting on the support side, our first support is going to be right here at 1886. It's definitely kind of served as a pretty good support level today. And it was also serving as a big support level before we gap down due to the stock split. So I expect that to continue to serve as a good support resistance zone. And, buyers are definitely interested in buying down at these levels. So watch out for that one. If it does break, we do have downside all the way to 17.15. And after that, downside all the way to 15.75. So be very cautious. Don't scale in fully if you are looking to add a position right here, because you have to understand that if it does break through, there is a lot of room to fall. However, that being said, if you are looking to add to your position or open a position, always try to buy and scale in near these support zones. By doing so, you're going to minimize your risk and maximize your upside. Speaking of upside, our first major resistance level is going to be right here at 21.81. If we do get above that, we are going to start to see probably a lot more bullish momentum flow into the market. A lot of the short-term indicators are going to turn bullish, and that's going to lead us to retesting this big area that we were seeing, in the last few months, which used to be between 240 and 265. Now it's between $24 and 26.50. And if we can get above that, then we are going to start to see once again more upward momentum, more volume return into the stock. And that's when we're going to start to retest some of these moving averages and hopefully reclaim bullish momentum. So that's everything I have on the chart. But one other thing to take a look at is going to be the volume. So like I said, despite the positive movement today, it was still a relatively low volume day, ultimately meaning that, the bullish momentum hasn't fully returned yet. I do think sellers are exhausted. I do still think buyers are a little hesitant. You have to pay attention to this number, because once this does start to increase back to these levels where we're in, the 10 million range, 11 million range, that's when we're going to really start to see some positive price action happen. And hopefully we're going to start retesting those moving averages and break out into a more bullish pattern and a bullish trend. So pay attention to volume. It's going to be your best indicator of price action. But let me know what you think happens next. I'm always interested to hear your guys' feedback. If you have any questions for me, let me know. I'm happy to answer them. If you like this video, hit me with a thumbs up. If you want to see more content like this, please subscribe to the channel. And aside from that, have a great rest of your night.